So we discuss now the chapter 9, section 51 to section 50, it's 59. We just group this together because this is more on the procedural aspect of the income tax return and the payment. When do you pay, where. You just take note of this paragraph A, and of course this subparagraph 2 for individuals who are not required to file income tax return. So for individuals whose gross income does not exceed his total personal and additional exemptions under Section 35, you remember that, they are not required to file income tax return. But if you're practicing your profession or you have business, regardless of your income, you have to file your income tax return. And if also one a letter B, if you're earning pure compensation income, then you're not required. There's this what they call the substituted filing. You just remember that you don't have to file your income tax return. And if you're filthy rich, you're just waiting for the interest, dividends, etc., royalties, and everything. For income subjected to final withholding tax, you remember this word sold. Now, if you earn compensation income or if you have business, you still have to file your for pure compensation earner, no filing. But if you derive income from compensation and you also have a business, then you must file your income tax return. And for the minimum wage earner, as defined in Section 22, they are now exempted from paying income tax as amended. And if I may add, katong wa bitay trabaho, contribute to nation building. So anyway, the other provisions where to file, just read this. When to file, you remember that every 18th or 15th of April of the following year, this is for the individual. Husband and wife, you just read that. I've discussed this before, earlier. For corporations, they are required to file their income tax return in duplicate. True. Kunuhay, true and accurate. Kunuhay na po. Quarterly income tax return. So they should file quarterly. For individual, it's only yearly. Taxable year of corporation. Just read this. For if you're planning to dissolve your organization, this one you have 30 days to file your return. For gains, capital gains realized from sales or sale of shares of stock not traded in local stocks, you have 30 days also. And yeah, you just read the provisions and understand, of course, the provisions. The common denominator here is that for the passive incomes, capital gains, etc., you have 30 days to comply with it. Well, I want to discuss about this withholding of tax at source. Okay, the idea of withholding tax was discussed extensively in Creba versus Rumulo. You remember Creba versus Rumulo, Chamber of Real Estate and Builders Association. So you must be able to enumerate or at least discuss the three primary reasons why the withholding tax system was devised. First, it is a convenient manner to meet his probable income tax liability, the taxpayer that is. And the second one is to ensure the collection of income tax. Kay mga bakakon man kayo mo, diin mo sulti og tarong. So, i-withhold daan. The reason class is, of course, it complies also with the two principles of sound tax system, the FAT, the fiscal adequacy, and the administrative, fiscal adequacy administrative feasibility. Igutom na ko. And the other one is to improve the government's cash flow. Of course, that's again the fiscal adequacy. Because if the government will wait for, like, you remember, every 15th, for corporations quarterly. So why would the government wait quarterly, or for individuals yearly, for it to collect the tax? So the withholding tax system was devised. And there is also this jurisprudence, the CIR versus Procter and Gamble. A withholding tax agent can, remember this, can file a claim for tax refund. As discussed in CIR versus Procter and Gamble. The reason for that is that the withholding tax agent is also an agent of the beneficial owner of the dividends with respect to the filing of the necessary income tax return and with respect to the actual payment of the tax to the government. Such authority may reasonably be held to include the authority to file a claim for refund and to bring an action for recovery of such claim. Okay? And also in CREVA, well, you must know by now the distinctions between a final withholding tax and a creditable withholding tax. So let's call them FWT and CWT. As the term implies, final withholding tax is the final settlement of tax for the given income. Usually these pertain to, the passive income. On the other hand, creditable withholding tax refers to the tax collected in advance by the government to support its day-to-day operation, and that is just an approximation of your income tax. A classic example of this kind of withholding tax is your salary, which makes you curse to high heavens when you see the withholding tax. Linte, may pagwa ko nag-overtime kayang withholding tax, igo ra, or overtime, igo ra ibayad sa withholding tax. O, di ba? Makita nila sa yung payslips. Katong mga white trabaho, again, contribute. After you take the bar, you look for a job and contribute to nation building. For who knows, pag-abogado ninyo, mas dagko mo o pamayad mo sa tong taxes. Okay. But then again, you can use these monthly withholding taxes to be credited against your tax liability at the end of the year, so that you won't have to pay in bulk your tax liability come April of the following year. So in CREVA, you may distinguish the FWT and CWT in this wise. For FWT, this is the amount of income tax withheld by the withholding agent, and it constitutes as a full and final payment of the income tax due from the payee on the said income. For CWT, creditable withholding tax, taxes withheld on certain income payments are intended to equal or at least approximate the tax due of the payee on said income. For FWT, the liability for payment of the tax rests primarily on the payer as a withholding agent. For CWT, payee of income is required to report the income and or pay the difference between the tax withheld and the tax due on the income. The payee also has the right to ask for a refund if the tax withheld is more than the tax due. The payee is not required for FWT to file an income tax return for the particular income. As I've said, it is the final settlement of your tax. Whereas in CWT, the income recipient is still required to file an income tax return as prescribed in Section 51 and 52 of the NIRC. Okay, so you must have a solid grasp of the distinction, class, and you don't have to memorize, just understand this, familiarize or master this. And you can craft your own sentences. But either way, as I've said, you must remember that subject to the definition laid down by CREVA, income from whatever source, okay, remember, whatever source will always be taxed. It doesn't matter if it is an individual, a corporation, an estate, or a tax that earned the income. They just differ on how the tax is being collected, When is the due date and who are liable in case of fraud? Because why? Taxation is the rule and exemption therefrom is the exception. Okay? So, I think that's about it for section 51. Are there any other provisions that yeah, you just take note of paragraph A2 also, and just familiarize yourselves with the provisions. And more important provisions are section 57 and 58, all about the withholding tax at source. Next, we will discuss estate and trust, distribution of dividend. We've discussed this already, section 73, and withholding of on wages. There is this an interesting case. Again, the Honda Cars Philippines. And after that, the estate tax. Okay? So, good luck.